Morning, everybody. Hey, welcome to Tuesday, the 14th of May. Hope you're doing well today. Have been out for a little while, doing some continuing education, IRA, Ed Slot, Master Elite program. So getting through that process and hey, got some good information. And we're going to talk to Dave here in just a few minutes. Before we do that, though, let's not forget that there are so many things in this world you and I, we have no control over. However, you can take control of your investment portfolio by controlling the amount of risk you have in there. That's why I developed the core retirement design. Give me a call at 863-382-0037 to schedule your core retirement analysis. With that, we've got Dave coming up next.
You're here today. It's always good when you're around. If you weren't here, I wouldn't be either. What can I say? Time check in on money. See what's happening in the world of finances up on Wall Street this morning. And saints be praised because we got a busy news day going on. Phillip Statler is back from a long continuing education session. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well today. You know, it was half and half, right? Half continuing education, half a little pleasure since we were so close to family up in Indianapolis. We took a couple extra days to see the grandbaby, and so that was always good to be able to mix the two together. And
well, shush, doggone it! I was telling everybody all week that you had your nose firmly on the grindstone all week long.
It felt like that some days.
such as grandkids, but you wouldn't trade that grindstone for all the tea in China, right?
Absolutely not. So.
Absolutely. Backing up to yesterday for a second, fill you in as to what happened on Wall Street. It was kind of a reversal of last week. Last week we were seeing the blue chips, the Dow and the S&P, both going up more than the NASDAQ. Yesterday the Dow dropped 81 points. Not a big drop, but still it was negative. S&P was down a rock-crushing $1.25. Wow. And NASDAQ eked out about a 47-point gain, almost a reversal of the trend of the other two indexes. Now we come up to this morning, and we lead off with an inflation number that pretty much took all the cards and let us play 52 pickup all over again, doesn't it?
Yeah, it does. You know, it's the markets just, you know, they just never give us exactly what we want, and we're definitely, you know, we had a couple good weeks, right, back to back, and the indexes were looking really good, and at some point the inflation numbers start to poke their ugly heads back up, and the indexes, they don't like that too much.
Offhand, I think not. This is the first of two big inflation number days. Today we get the producer price index, wholesale inflation, and we haven't got the full report in quite yet, but what we got doesn't look good. The month-over-month number in the month of April, producer prices were up a full 0.5%. Now, in March, they were up 0.2%. My tip sheets had the market expecting 0.3%. We got about 60% more than we expected and 2.5 times the inflation rate that we had in March. I got to assume the futures on your instant tick number kind of took a nosedive when that number came out at 8:30. Am I guessing right?
Yes, sir. They sure did. They did not like that number, again, because that's just giving us indication that inflation is not under control with prices going up. And so, you know, the Fed's got to be looking at these numbers thinking what's their next step.
And the governors that were on the rubber chicken circuit all week last week were saying this down the line. I mean, we had 2 or 3 of them on their after dinner speeches, all saying, "People, don't get too excited." The most optimistic one of the bunch said sometime around December you might see an interest rate cut, and the rest of them were basically saying, "Don't count on any people. We're going to hold rates high until we get this doggone thing under control." Well, you start seeing wholesale inflation start going up by a margin of 2.5 to 1 over the prior month. I start thinking maybe that might even put increases back on the table, marginally anyway.
I got to think there's at least a sliver of a chance that could happen because they just are having a tough time getting that number under control, and that's their focus. And so, you know, I wouldn't say that it's for sure going to happen, but I think that when you say rate cuts versus rate increases, I think rate increases now have at least a little sliver of statistical chance that could be a case.
Yeah, I'm still going to stand on my historical realpolitik view that they won't let it happen before the election happens in November. But yeah, I got to start wondering if things continue at this rate. Once we get past the election, I would say the chance of an interest rate decrease at this point in time is somewhere between slim and none.
Yeah, I would agree with you. I mean, I just can't see how they can lower interest rates when the inflation numbers continue to be poking their heads up higher.
Yeah, and the trend begins. I mean, last month we were saying that it looked like, we can't really react very much because, okay, it's just a 1 month data point. Well, this is starting to look like we got a trend at the very least on some of them. When the core number comes out later on this morning and we actually get that, it's going to probably give us even more reason for pause, and we'll get that and with the details and the consumer price index numbers tomorrow morning. Meanwhile, yesterday, one of our favorite characters came back online, Keith Gill, the what does he call? Oh, yes, the Roaring Kitty, and that brings back the Reddit gang again and their meme stocks. I'm not 100% sure I wouldn't like to be GameStop this morning. How about you?
Yeah, both GameStop and AMC both have benefited substantially. I mean, it says GameStop was up 120%. And AMC was popped like 106%. So I know AMC took advantage of that and sold some of their treasury stock and about $250 million worth. So that was a good thing for them to kind of prop up the coffers.
That ought to get them through a couple of crummy movie openings at the very least. to fill people in, to give an idea how goofy the Reddit gang can be, this dude called the Roaring Kitty just posted a simple meme on Reddit of somebody focusing in playing a video game. Didn't even say anything. And the whole world went crazy, and a whole bunch of short sellers on GameStop lost their shirt off of one dumb little meme. I mean, if anybody ever doubts my assessment that Wall Street is really the study of abnormal psychology, that kind of adds some credibility, doesn't it?
Yeah, it does, definitely. If that's all it takes to get people to jump on the bandwagon, is crazy.
Absolutely amazing. On to the serious stuff down the line. I got a columnist. I got to bring this nasty word up. All of us that were alive during the 70s, the word stagflation. You look at this thing from the producer price index this morning, and you look at the notion that the Fed is probably not going to raise rates at the very least until we get down toward the end of the year, and certainly isn't going to cut rates. We're probably, I hate to say it, maybe stuck in the 3% inflation rate. And with a slowing employment economy, I start wondering whether we're going to start using the word stagflation a little more. I got at least one columnist that thinks it's approaching the point of likely, wouldn't you?
Yeah, I mean, I think it's a possibility. Because, like I said, this thing just keeps, its head raised above, and they just can't seem to knock it back down. So, if we stay in this neighborhood, at some point, something's got to break. And with interest rates where they are, I mean, we're seeing it here, right? We're seeing a slowdown in the real estate market. We're seeing some prices start to fall a little bit in real estate, and so I think that may just be the start of things to come.
Absolutely, and the definition of stagflation is not really going bad, but just not going good, doing nothing, and just stuck with a rising price level that just slowly but surely kind of bleeds us dry. And that's kind of sort of what we look like we're heading toward, and it's not a pleasant thought whatsoever. Earnings season continues, and we got one household name reporting early this morning. How did Home Depot do anyway?
So, talking about prices going up and the consumer holding off, that's hit Home Depot. They said that people aren't going after those big home improvement projects right now. They're holding off because interest rates are so high that they just can't afford to do it right now. But Home Depot had a mixed quarter this last quarter. Their earnings were up by about 3 cents a share to $3.63 a share. However, their revenue missed by a little bit. So it's kind of a mixed bag for them today. But they did say that they're seeing, the consumer is not able to keep doing those projects, and they're trading down a little over 1% right now.
Ooh, and there wasn't a monstrous miss either comparatively, but a miss is a miss.
Well, yeah, and I think it's the forecast of looking forward that, hey, we are seeing the consumer is slowing down. They aren't spending as much, and that's hurting, their top line.
Yeah, and holding the same pattern we've had that I got all last week too while I was doing this solo. I mean, even if you beat the street, if your guidance isn't flawless, the effect is just absolutely monumental, even compared to prior quarters where guidance always kind of takes lead in front and center. But this quarter, if your guidance isn't optimistic, you're pretty well toast with the market.
Well, yeah, that's right. I mean, even like I'm looking at United Airlines, right? They came out and
Yeah.
gave a summer travel update, um, and they expect to have the busiest Memorial Day period on record. But looking over the summertime, they're seeing some travel start to slow down a little bit, and it actually had their stock down about 1% earlier this morning.
Ooh. Well, resetting the table, it was kind of a flat day on balance yesterday on Wall Street. I've got delayed quotes here. I know you're more up to the second than I am, but my delayed quotes are showing a defined knee downward right around 8:30 this morning, 45 minutes early. Where are we heading so far?
Hey, we've seen a little recovery at least in the Dow. The Dow has gone back green, not much, $11, but hey, that's green, right? The S&P 500 is basically flat. It's down less than $1, and the Nasdaq 100 is down a little over 0.1%. That's about $24. So it's kind of a mixed bag right there. On the commodity side of everything, we've got silver up another 1%, Dave. And I guess you really talked it up last week because it's up to $28.74 an ounce right now. It's been a while since I've seen it that high. And then we've got gold up 0.5% to $2,355 an ounce, and crude oil heading down, down about almost 0.7% to $78.58 a barrel.
Yeah, yesterday morning it was kind of bumping its nose above 79, and I was thinking, I don't like this one tiny little bit. Overseas markets had a mixed bag on the Asian rim this morning. The mainland Chinese market's off by a little. It kind of dragged everybody else down by a bit. The overall Asian marketplace down fractionally at the end of their trading day at 6 a.m. this morning. Over in Europe, it's a little mixed, but still the overall European index is staying very, very slightly ahead of the zero mark. Slight tinge of green halfway through their trading day, but it looks from the updates I'm seeing like they're going down a little bit after looking at our inflation numbers, so don't expect good news at the close in Europe either. Getting a retirement plan together counts for a whole heck of a lot. The closer you get to that magic 60-plus age, the more important it gets. How do I find you in order to get a picture of how to retire the way I want to?
Dave, those are the reasons we developed the core retirement design. They can give us a call at 863-382-0037 to schedule their core retirement analysis. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning on Light FM to tell you what happened today and is likely to affect your money tomorrow. CPI day tomorrow, Phillip. Are we ready for a seismograph on the futures?
Hey, it'd be nice if it came in where they want it to come in, for sure.
Yeah, it'd be nice to have good news. Every time the government says something, it generally isn't. I'll see you then, my friend.
All right, take care.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. It's not.
Hey, folks, again, I want to thank you for joining us today. Have a great day. I'll talk to you again tomorrow. Take care. Bye now.